Let me summarize how to become wealthy in a single sentence. Close the doors, be fearful when others are greedy, and be greedy when everyone is fearful. If someone can sit peacefully in the shade today, it is thanks to someone planting that seed years ago. The experience of the world's most successful investor, Warren Buffett, which spans over 70 years, consists not only of numbers, but also of unshakable habits that last a lifetime. So how do we apply this billion-dollar methodology to our own lives? Here are 7 key secrets distilled from Buffett's investment philosophy that will change your financial future. Number 1. The awareness of saving and the power of small beginnings. Building wealth is more about your spending discipline than your income level, because someone without a saving awareness cannot hold on to money, whether they earn 10,000 lira a month or 100,000 lira. The reason lottery winners often return to their previous state in a short time is that they lack the habits to preserve their money. Buffett's first recommended step is to set aside 10% of your earnings before spending it. If this seems difficult, you can start with the growing savings technique, which means starting with small but increasing amounts, such as 20 TL in the first week and 40 TL in the following week. The main issue here is not just saving money, but developing the habit of steadily building the necessary capital to be able to invest. Number 2, the art of value investing and buying a $0.25 for $1. In real life, opportunities to buy a $0.25 for $1 are rare, but in the investment world, this is possible. Value investing is precisely about recognizing this discrepancy. Buffett chases moments when a company's true value does not align with its stock price, drawing these principles from Benjamin Graham's teachings. The lack of guarantees in the stock market is not actually a disadvantage. Rather, it presents a significant opportunity for middle and lower income individuals who understand the rules of the game. Names like Coach or Sabanshu do not make you a partner directly, but the stock market opens the door for you to share in the profits of these giants when you find the right company. Number 3, discipline of staying within your circle of competence. The safest way to invest is to stay within your circle of competence, which consists of your own areas of interest. Buffett does not invest in any business he does not understand. Instead, he suggests analyzing which brands you like, what you are an expert in, and what you spend money on. The answers to the questions, what do I love to do, what am I good at, and what do I spend money on, determine your investment area. Staying within your area of expertise, rather than chasing tips in Telegram groups, is the strongest shield that prevents an opportunity from turning into bankruptcy. Number 4, economic moat and the company's defense power. Buffett believes that for a business to remain resilient against its competitors, it needs to have an economic moat around it. This moat can be a generic brand name, low-cost production power, or having more capabilities. The greatest strength of giants like Nike, McDonald's, or Apple is those impenetrable fortresses that ensure they do not lose customers even if they raise their prices. In the tech world, moats can sometimes be overcome by innovation, but companies with a strong brand perception and market dominance are the most resilient against economic crises and market fluctuations. 5th number, taking an X-ray of the company by reading financial statements. The way to truly understand whether a company is profitable is to examine the balance sheet, income statement, and cash flow. Analyzing the company's net worth and debt ratio in the balance sheet is essential, and in the income statement, it is necessary to check whether the return on equity is above 15%. While dealing with numbers may seem difficult, it is the only way to determine if the investment is sound. Remember, a company may be of high quality, but if you are buying a $1 million Mercedes for $2 million, it will not be a wise investment at all. 6th number, net-net method and margin of safety. The net-net method developed by Benjamin Graham is based on calculating the liquidation value remaining after a company has paid off all its debts and comparing it to the stock price. If a company's net asset value per share is significantly higher than the market price, this provides the investor with a substantial margin of safety. The best opportunities arise when the stock price is one-third cheaper than this asset value. This mathematical approach allows you to base your investment on concrete reports and the actual values in those reports, rather than acting on speculation or intuition. 7. Patience and consistency in portfolio management. Buffett's biggest secret for a successful portfolio is to be patient enough to know when to withdraw from the game when everything seems overvalued. Not putting more than 10% of your capital into a single stock and ranking companies by trust protects you with the logic that diversification is protection against ignorance. You should review your portfolio at least once a year and only sell a stock not just because its price has dropped, but when the fundamental structure of the company has deteriorated. Instead of abandoning a great company just because it had a bad week, waiting for its true value to be recognized is the key to long-term wealth. Warren Buffett's 7 secrets may not make you a millionaire overnight, but they will lay the strongest foundations on your path to financial freedom. It all starts with a savings mindset, grows with value investing, and becomes lasting with patience. Remember, the stock market is a great opportunity for those who know the rules of the game, but a significant risk for those who act on tips. Putting in the effort to learn this mechanism first, and then staying true to your strategy, will lead you to success. Wishing that these principles guide you on your financial journey. If you liked the video, you can leave a like and subscribe to our The Global Tot channel. Thank you for watching. See you in new videos. Goodbye.